Morning, it's Harvey Jackson. Just going to get through some of the news that happened yesterday, and I obviously missed it. China and U.S. meeting delay affects the soybean price with a limit down move, soy oil with a limit down move, and canola with a $30 move down as well. So it was substantial. Didn't look like that when I was looking at it first thing in the morning, but it definitely had the big move down. Soy oil rises after the biggest drop in 2000, or 2023 on potential G meeting. So it's actually recovered a bit from where it was, but the potential meeting getting delayed has actually caused a lot of angst in the market. And part of that is some of the other leaking news that came from that as well. It was suggested that there's still going to be the 25 million per year for the next 3 years of purchases, but that was not mentioned about the extra 8 million, which is a problem for the canola there right now, or the soybeans right now. They've got a big carryout pending. And, Trump was talking yesterday, talking about construction of whatever. I don't know. I couldn't pay much attention to it because it was just, hot air coming out. But NATO allies reject Trump's call, and crude oil is back up here. And in this article, some of the quiet things are usually kept quiet and not said or said here. So maybe I'll just read a couple of them here. So global edible oil markets are behaving unpredictably as energy supply disruptions from the Middle East war lifts hopes of biodiesel demand, though subdued buying from major importers are clouded the price outlook. Wartime market behaviors is always very different, and many developments come unexpectedly. Was the quote. Right now, edible oil demand is subdued as prices have jumped. Market is high was or Market has high hopes for biodiesel. It remains to be seen which factor will eventually prevail. And then down here, they're talking about the several soy oil cargoes from South America and Black Sea booked for delivery in the coming months to go to India were washed out after global oil prices surged as buyers found more profitable to return the shipments to suppliers rather than process and sell them to India. And I've said this all along. India, China are very value buyers, and they uh, uh, obviously that product was going there without a price tag until it landed, I guess, and or they had a price tag and they just canceled the contracts. Rapeseed and mustard oil are the main winter sown crops in India, and supplies are expected from the new season crop from those crops next month. So Nopa Crush came out yesterday, and I borrowed this from Standard Grain as well. But just his graphic of domestic crush versus exports, but exports are still important, and you can see that in Karen Braun's statement here, uh, there's soybeans crushed was above the expectations, 17% year over year, record daily crush rate for any month. Soy oil stocks also jumped at the top end of the estimates, and it's 38% year over year on the stocks as well. Diesel prices are creating havoc in soybean uh, producing area as that crop is trying to get to the market, and because it's trying to get to the market, it's just too expensive. Quick look at the weather here. There is some improving of some of the drought areas in the last week or so, and that's we'll have to see if that can continue for sure. Cold down here, the freezing temperatures warning down here, and there's winter storms up here, of course, as well. But this is kind of where the cold is the coldest, but it still did push all the way down right to the Gulf. Snow to the north, and soil moisture is pretty reasonable in South America. There is no huge areas of drought, but that could persist as well. Who knows? Canola, when I took the screenshot, was up almost $11 at 7.13. And the November contract at call it 7.10. Rapeseed is only up three-quarters of a dollar at 4.99. Soybean oil basically flat at 64 cents a pound. Palm oil up as well, or sorry, down slightly at 75 ringgit. Crude oil is up $3.17. So the losses that it had yesterday are pretty well washed right back out. Soybeans down 3.5. A spring wheat was just down a couple or 3 cents, but the other wheats are basically just flat, and corn is up a penny, and the Canadian dollar is down 11 pips. So this is, I left these lines on here on purpose. This is just setting up to be short, and the signals are short. You broke your scared rabbit line, you broke your other uptrend line. Even though we're trading positive, it would be have to really look at this whether this is the sign that it's going down here. It could be just giving us an opportunity to maybe get some of those sales made. But and again, one of the first articles we talked about is the crude oil prices and war and how it affects these other commodities as well. Because the soybeans are the one that took the market down. It still looks like this rapeseed is supported. Looking at $73 price differential between Canadian canola and rapeseed, that is not enough. That might not even cover the freight to get there. Soybean oil futures broke that uptrend as well, but looks like it's going to try to get above that trend line there as well. So what we're waiting for is the guidance for the EPA on the quota, what's going to be there. So your soybean futures, uh, huge down day, is still down slightly as I took the screenshot, but um, we're below that high that we made there. Yeah, it's not looking too good for soybeans at the moment. Crude palm oil futures slow to react. Here is the weekly chart of your crude oil, and you can see this leg up here got into that same area that we had back in 2022. Are we going to get back there is the question. Here's your Brent. Uh, and your diesel fuel futures, you're over $4 a gallon on the April contract. Quick look at the Canadian dollar. Looks like that trend, that pivot point extension, and some of the moving averages are right there as well. And we'll have to see if it can consolidate or is it going to go this direction. If it does, it probably gets supported by this 200-day moving average as well. US dollar index got up to the $100 index and pulled back. Quick look at wheat. I put this into a line chart because it's so scattered. There's hardly any trade on the 6 months of December futures. Still looking to get into that closer to the $7 mark, but this is the current last trend of wheat, and there is some trade that was over there back in May. And this is that same trend. If we're looking at the longer term trend on the continuous chart, we did break through, but we need to break above those areas before you can say you're in a bull trend. Same thing, just a different visual. Here's your, the December contract still looking in that $7 area for sure. Kansas, nice uptrend. So wheat didn't get affected by the Xi story, the China Trump story of not visiting or not going to go there at the end of the month. Wheat doesn't seem to have the same effect here. Here's your French milling wheat still going up. Your corn futures still looking for something in that same area as the previous highs over there to make some sales for sure. Oat futures, I don't talk about very often, but we did kind of make some highs. We're trying to get back to some previous highs that we made last summer. The end of March is the planting acreage